folks, Dan Frio here, the rate update. Happy Friday and welcome. Today is going to be pretty quick. There's really no news coming out, but I'm going to show you just a few things here in a second. But if you like my channel, please don't forget to sign up for our newsletter down below. It's free. Also, give us a thumbs up if you don't mind. But that being said, where are mortgage rates today and what's the news in regards to real estate? Because our goal here is to educate and inform you guys everything real estate, especially when it comes to the financing options. So let's get to it. What do we see here? Well, here's the newsletter that you would have gotten if you were already a member, but if not, you can just subscribe right in this area right through here. But let's get on to what's going on in the markets. Right now, we see the Dow Jones, and I apologize, this is black, not green. Because I have a green screen background setting set in place. But we see the Dow Jones up 160, S&P up 30, the NASDAQ up 107. So one of the first thoughts I think of when I see this is, oh man, people are moving money back in stocks and out of bonds. Well, maybe not necessarily, and we're going to go over that in a minute. But why are you here? To figure out where mortgage rates are. So we do this every morning. I let you know where mortgage rates ended the day yesterday. So this is where we ended the day yesterday. Then we're going to go over some economic news and then what the projection is for today and maybe next week on mortgage rates. So that being said, let's get to it. Let me go through this cell and explain it to you so you get it, and then we'll fly across the thing. This is mortgage rates published by Mortgage News Daily. They surveyed lenders all over the country. So this isn't a specific lender. This isn't a specific loan. It's just an average of a 30-year fixed rate all over the country. Okay, so you see down through here, the cell. It gives you what the 30-year fixed rate is right here at 5.36. This right here means it was down from the previous day, down 0.08. We reference that as 8 basis points. And right here is how much it would cost you to get that rate, again, on the national average. How do you figure this out? Well, you change that word points to a percentage sign. So what you do is you take your loan amount, which would be in this case 100,000. You hit the times button. You hit 0.4 right there. And then you hit the percentage sign, hit equal, and that's your answer. So that's what that would be. So let's go across the gamut here. We got the 15-year fix coming in down 5 basis points, coming in at a flat 4.8, also comes in with that 4 basis points. We got the 30-year FHA/VA/USDA, the government-sponsored loans right here, staying right at 5%. It's weird how it goes from 5 to 5.1 to 5.2, back down to 5 and so forth, but it's sticking right at 5, pretty stubborn there. The 30-year jumbos coming in at 4.75, down 3 basis points from the previous day. And then we have the 5/1 ARM, which is at 4.6. The spread here is getting not as good, but I want to just show you a little caption here in 1 second where ARMs are coming more attractive. But the 5-year ARMs coming in at 4.6, down 5 basis points, comes in with a 0.5 point. That calculation would be basically the same as over here. The chart is, we're on uncharted territories, highest rates in over 10 years. The trend for today is positive to neutral. There's really nothing coming out. So, but if Federal Chairman Powell sneezes, who knows what will happen with rates. Economic calendar for today is completely blank. I love it. I might actually leave early today because this is finally a breath of fresh air. What's the MBS markets doing? Well, the stock market's up. So normally this would be down, but it's up as well. So what is this? Well, this is the bond that trades on Wall Street. So how do we figure out your mortgage rate? We take a yield of something. And in this case, we use the yield on the mortgage-backed security, okay? And then there's adjustments to that would come up with your final interest rate. The good thing here is the price of this bond, this is representing the price of the bond right here. As the price goes up, we see rates going down. So usually you don't see this going up in tandem in a normal market with the stock market, okay? You can see the chart down below. I think we might have hit a short-term bottom finally. You can see the trend down there also is positive to neutral. So nothing but I'll take all this data. I'm not going to say it's good news, bad news. I'll take it, put it that way. Some good news here is Black Knight just came out with a report. You can see that report is out just now. Black Knight's first look, mortgage delinquencies hit yet another record low in April, driven by continued improvements among serious people past due. I think the banks have learned their lessons. They're going to help people as much as they possibly can keep their homes. So that's another reason why we should not see a huge housing crash. Some more news in the makings right here. The housing industry will soon be up to its arms. I adjustable rate mortgages in those in non-QM loans. It's kind of a little bit scary, I'll tell you that. And I'm going to do a video about this next week. And then what do we? So that is it for today. So hopefully it's simple, sweet, and you enjoy your weekend here in Chicago. It's supposed to be a balmy 60 and rainy all weekend, but I hope you enjoy yourself. So I'll be back with my midday report, letting you guys know where interest rates are for the day and then the why. So hope you enjoy the video, find some value in this. And I'll see you later this afternoon. If you want to find out more about me and my team, visit us at therateupdate.com.